Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of Mastering the Buy and Hold Strategy, a guide for smart investors. Why do some investors win big while others struggle to keep pace? The answer often lies in a simple yet powerful idea: the buy and hold strategy. At its core, this approach means buying quality stocks and holding them over many years, riding out market ups and downs. It may sound simple, but don't be fooled, the potential rewards are serious. This strategy is crucial for those who aim to build wealth over time without getting entangled in daily market swings. With a focus on long-term gains, it offers a steady path to financial growth. We'll explore why patience can indeed be a virtue in investing and how this method remains a cornerstone of investment philosophy, even in today's unsettling financial landscape. Understanding the buy and hold strategy. Investing can feel like sailing on unpredictable seas, with markets rising and diving like waves. Yet, there's a strategy that embraces calmness amidst market storms: the buy and hold strategy. This approach has been favored by many successful investors who prefer a steadier, long-term view. What is buy and hold? Buy and hold is simple yet powerful. It means purchasing securities, like stocks or bonds, and holding onto them for a long time, regardless of market ups and downs. Think of it like planting a tree. Once planted, it needs time to grow. You don't uproot it just because the weather changes. Instead, you trust in its potential to flourish over time. This strategy relies on the belief that, despite short-term market fluctuations, the value of good investments will rise over the long haul. Investors who use this method are less concerned about daily price swings and more focused on the big picture. They invest with a long-term mindset, confident that patience will pay off. Key characteristics of buy and hold. The buy and hold strategy is defined by several key traits that distinguish it from more active trading approaches. Long-term focus. Investors commit to a timeline that often spans years or even decades. The aim is to benefit from the compound growth that accumulates over time. Minimal trading. Frequent buying and selling are avoided, which reduces transaction costs and taxes that can eat into returns. Market resilience. Buy and hold investors typically remain unfazed by market volatility. They believe in their chosen investment's fundamental value, expecting the market to correct itself over time. Diversification. While holding for the long term, investors often diversify their portfolios to spread risk across different assets and sectors. Cost efficiency. By minimizing transactions, investors keep costs low, which can lead to higher net returns over time. To sum up, the buy and hold strategy is like the patient gardener who avoids the temptation to frequently replant their garden. They understand that consistency and perseverance are key to reaping a bountiful harvest. Historical performance of buy and hold. The buy and hold strategy is like planting a tree and watching it grow over time. By holding onto investments for the long term, investors can often ride out market ups and downs, capturing growth through the years. Historical data shows that the stock market, despite its volatility in the short term, generally trends upwards in the long term. Let's explore why this approach has stood the test of time. Market trends and long-term gains. Have you ever noticed how a roller coaster dips and rises but eventually ends up back at the station? The stock market behaves in a similar way. Throughout history, despite occasional slumps, its overall trajectory tends to climb. For long-term investors, this upward trend can mean significant gains. Growth over years. Stocks have consistently outpaced other investment types, like bonds and cash, in the long run. This trend means greater wealth accumulation for patient investors. Compounding effects. Like snowballing interest, reinvested earnings can lead to exponential growth. Over decades, even modest annual returns can result in substantial profit. Case studies. Successful buy and hold investors. Let's look at some real-world examples of people who bet on buy and hold and won big. These investors understood the power of patience, and their stories can inspire new generations of investors. Warren Buffett. Known as the Oracle of Omaha, Buffett's strategy focuses on buying quality companies and holding onto them. Over the decades, this approach has turned his firm, Berkshire Hathaway, into a financial powerhouse. John Bogle. The founder of Vanguard, Bogle promoted the idea of index investing as a buy and hold method. His advocacy for low-cost index funds has helped countless investors achieve steady returns. Peter Lynch, manager of the Magellan Fund, Lynch believed in buying what you know and sticking with it. His fund saw an average annual return of 29% during his tenure due to this strategy. Each of these investors showed that by staying the course and avoiding the temptation to sell during market dips, substantial success could be achieved. Are you ready to put these lessons into practice on your investment journey? Advantages of buy and hold strategy. For those looking to invest with confidence and ease, the buy and hold strategy is a beacon of promise. It's like planting a tree and watching it grow, sturdy and strong, over time. Instead of getting caught up in the whirlwind of market ups and downs, this strategy focuses on patience and long-term gains. Reduced transaction costs. One of the main perks of the buy and hold strategy is that it can save you money on transaction costs. Think of it like choosing a long road trip over constantly hopping on and off short flights. Every trade you make in the stock market often comes with fees. When you don't trade often, you naturally reduce these costs. Moreover, these savings can accumulate over time, leaving more of your investment to grow uninterrupted. Simplicity and convenience. Investing can feel like navigating a dense forest without a map. However, the buy and hold strategy acts like a clear trail. It's straightforward. You buy stocks or assets and keep them for a long period. This means less stress from constantly checking market trends or making quick, reactive decisions. It's a simpler, more convenient approach. You gain peace of mind knowing you're in it for the long haul, weathering temporary storms for the promise of future rewards. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.